Hello Oracles, Tesla closing over $300 today. That was awesome. It was good to see us closing over $300. So now we're going into CPI tomorrow, and we're definitely looking at numbers that are going to be coming down most likely. We've got expectations that are looking around 8.1%. I personally think we are going to break that and come down at 7.9%. We've got core inflation numbers are looking around 6.1% for expectations. I think we're going to come in at 5.9%. We've got month-over-month numbers looking at a negative 0.1% and month-over-month core numbers looking at a 0.3%. So again, everything is trending in the right direction. So we might actually get these numbers to come in and we might see the market rally some more. So playing around with a couple of things in my head, just looking at, different possibilities and scenarios that can play out. Looking at, hey, if we beat expectations, we're definitely looking at the trend going in the right direction and the trend moving faster than expected, which could then lead the market to believe that the Fed is going to be doing a lower rate hike, maybe not a 75 basis point, maybe more like a 50 basis point hike. Currently, the market is still pricing in a 70% chance for a 75 basis point hike. So if we do end up beating expectations for CPI, that expectation could be lower. We might have a higher percent expectation for a 50 basis point hike. At that point, the market will most likely cheer and rally going past these numbers. However, just playing, devil's advocate in my own head, because I always like to prepare for the worst, but hope for the best. I am hoping that that is what's going to happen and we are going to rally. I am preparing for us to maybe get these numbers coming in, but market manipulators, knowing that the entire market is expecting this and they're waiting for this excitement, waiting for a lot of people to buy in on these numbers and then pull the rug out from underneath us. Again, that's just me playing devil's advocate. We've seen it happen in the past before. So again, I'm still anticipating a pullback. I don't know if we're going to pull back to fill that 247 gap. Right now, we are definitely looking at the cup and handle that we had before. We're on our breakout. We have predicted this. We saw it coming. I was anticipating us pulling further back before the breakout. I was wrong on that. We are now in a full breakout. So volume is still not super high, but it's a little bit lower than average. Not a big deal. But we continue to push higher. So these are just the things that I'm paying attention to. This is why I play both sides of the coin, because nobody knows what the future is going to bring. I know for me, long term in the future, Tesla is going to do very well. That's why I add on a daily basis, because regardless of the daily swings that happen in the stock price, I know it's going to be a good buy long term. But when it comes to, adding extra because I want to buy for a lower price, I'm still waiting. I do anticipate a pullback. Right now, we're kind of trading in a range between 265 and 312. So the way we've been trading all year long is we've been trading from a lower gap to a high gap. And we've been trading in that range, and then we come down, we fill the lower gap, and then we make another gap a little bit higher, and then make another gap a little bit higher. This is exactly how we've been playing all year long. This is the first time we've kind of broken that trend and haven't come down to fill that lower gap first. So we may not fill it. Gaps fill 9 out of 10 times. We've filled them all year long. Maybe this one doesn't fill at 247. Don't know. Still a lot to go in the macro environment though. So I'm still not in the clear yet. I'm still not saying, hey, we're clear of the macro environment. We've seen wilder things happen this year, so I cannot rule out us coming down to fill that gap at 247. So I think the real test is going to be if we do continue to push higher tomorrow with CPI data that comes in, then we see PPI data coming out on Wednesday. If we continue to push higher, I'm going to be watching that $312 level. So it's between $312 and $315. Previously, that was that $940 to $945 level that we just could not break. So I'm paying attention to that, because if we can break through that and hold strong above it, maybe we don't end up coming back to fill all of the gaps. So these are just the levels that I'm paying attention to. So 312 for me is that next level above us to see if we bounce off of that and come back down. Now, when you're looking at these levels, if you're looking at a day chart and you're seeing how it's trading on maybe a minute chart or a 5-minute chart, take a look at how we're bouncing off of that number. So if we hit 312 3 times, on that third try, if we do not break through, expect us to fall back significantly, because that's usually what happens. It's that triple test. And you get that triple test off of something, you're either going to break through and run, or you're going to bounce off and fall far. You usually don't stay around that level on that third try. And so looking at these expectations and the fact that the month-over-month expectations are actually negative, this leads into something that Elon and Cathie Wood have both mentioned recently about deflation becoming a potential problem in the future. If we are getting these numbers coming in and a month-over-month CPI reading that is in the negative, that shows that month-over-month inflation is actually coming down. We are starting to see rents coming down a little bit. Those really haven't hit these numbers yet, but if rents do continue to come down, that could mean that we are pulling down in inflation significantly. So if the Fed ends up raising rates too high, maybe a 50 or a 75 basis point hike, that could mean that when we get down the road, we could see a significant cliff falling off and actually lead to deflation, which is not a good thing either. And the reason why deflation is not a good thing is because when consumers see prices coming down, they tend to hold off and say, hey, you know what? Mentally, I'm thinking, I'm seeing prices are coming down on something. I don't need to buy it right away. I'm going to wait for the prices to come down further. And the more people who do this, the more people wait. And then there's less demand, and because there's more supply and less demand, prices come down further. And then it keeps on rolling. And then the only time people are going to buy is when they actually need something, so the demand isn't as strong. So in order to stimulate the economy, that's why the Fed likes to have a 2 to 3% inflation rate, because people always want to buy things before the prices go up, and they're continually buying things. That's what moves the economy forward. So deflationary is going to move it in the wrong direction. And this is something that Elon had been talking about previously, anticipating that the commodity prices and the prices of the goods that they are paying for are actually coming down. They're looking 6 months into the future at potential prices. They see them coming down. When the Fed raises interest rates, that doesn't take effect immediately. Yes, the interest rates do, but the way it affects the economy takes 3 to 6 months for it to actually go into effect. So all of the interest rates that they did back in March are just now starting to affect the economy. So clearly what they've been doing when you're looking at the core CPI, because the core CPI is what the Fed can control, when you're looking at that, those numbers are coming down. And yes, on a month-over-month basis, they're still expecting a 0.3%, but they still have the July interest rates that went up that still have yet to actually come into effect. So them raising the rates as hawkishly as they're talking about could in turn lead to significant deflation in the future if the inflation is naturally coming down as it is. So this is kind of like pushing the snowball off the cliff rather than just letting it roll down the hill naturally. And now while deflation is a bad thing and you don't really want to see that, especially it kind of spirals out of control, the Fed can U-turn. And I think at this point right now, if we see inflation coming down as we are expecting, and the Fed does raise interest rates at 50 or 75 basis points, we might actually get to the end of the year and see that November and or December FOMC meeting come in with very low interest rate hikes, if anything at all. And if the Fed does raise the rates too high too fast, we might actually see them U-turn in early 2023 and actually do quantitative easing again and pull interest rates down some to get and re-stimulate the economy. And historically, every single time that the Fed has gone to quantitative easing or dropped interest rates, we have seen a bull market come after that. All these things are different scenarios that I'm playing out based off of Elon and Cathie Wood and their deflationary talks. Elon talking about the product and the cost of all their goods that they've got coming in, looking at interest rates going up, look at inflation coming down. I'm just putting the pieces of this puzzle together and anticipating if these things happen, this could happen in the future. This is kind of how I play the different games in my head. I look down the road and I say, well, if this plays out, this could be the outcome. And I do that with a lot of different scenarios. This is how I make my plans for the future. And again, this is why I dollar cost average and why historically dollar cost averaging is the best way to go, because there are so many possibilities that could play out in the future. Nobody knows for sure what is going to happen. And this leads me to some of the tweets that I have been seeing between James Stevenson and Elon on Twitter, talking about, it's just about being less wrong. That's kind of my mentality when it comes to investing, is be less wrong, because you're not always going to be right. That's nearly impossible. And if I can minimize my losses while trying to maximize my gains, that's obviously the way to go. But no matter how much you maximize your gains, if your losses end up losing everything for you, that's not good either. So you want to minimize your losses, and that's why I play all these scenarios out and give myself these safety nets. And when you're trying to be less wrong, a lot of times it comes down to risk and risk tolerance. And Ross Gerber said it himself, it is risky to invest in the stock market, but it is also risky to not invest. And many of you are out there just all in on Tesla. And if you're all in on Tesla, many of you are thinking, well, that is your safety net, because being all in on Tesla is a strong bet for the future. And in many people's eyes, it is the strongest bet for the future. So that is a great investment. That is why I am so heavily invested as well. I just dabble in other things also, and I do them so that I can try to get more cash to invest more into Tesla. But even those, that's where it comes down to being less wrong and making sure I can capitalize on those investments to be able to get more money to invest into Tesla. So let me know your thoughts in the comments below. How did you feel about us closing over $300 today? Up over 1.5%. Do you think we are going to continue breaking out and maybe not pull down to fill those gaps? I know many of you have voiced your opinions in the comments thinking that at this level and the way we're going, we probably won't pull back. I just can't justify saying we can't pull back. I'm just saying that the percentage chance of us pulling back is getting smaller, but we've seen some really wild things happen this year, so I cannot truly rule it out. But the way we're moving right now is the nice breakout that we have been seeing from the cup and handle. So that prediction came to fruition, just didn't pull back as low as I thought. But let me know your thoughts in the comments below. How high do you think we are going to go? And do you think we are going to pull back? And what is your prediction for CPI tomorrow? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have memberships now if you'd like to check those out down below. $1, $2, $5, not necessary, but if you guys would like to support the channel and get yourself some little perks, go ahead and sign up there. And we do have a Patreon if you'd like to support the channel any further as well. Thank you so much. Have a great one.